Hi everyone, I'm Ramisa Rob, Geopolitical Insights Editor at the Daily Star. Thank you so much for joining us. Before we start today, I just want to mention that the discussion is not a political commentary. We're not going to be taking sides like it's a cricket game. We condemn all violence and war everywhere. We're here today to talk pragmatically about geoeconomy and dispel some of the misinformation out there that exists online. The goal today is to learn from our guests' expertise, have an educational discussion that gives us all the information and insights to hopefully make more informed decisions about our lives. So, without further ado, I'm happy to welcome Ms. Ayesha Tariq, CFA. She's the CEO and co founder of MacroVisor, a Dubai based independent research firm focused on macroeconomic insights and cross asset investment strategies. She graduated from IBA in Bangladesh and is a macro financial analyst with over 22 years of international experience. She regularly appears on Bloomberg TV, on Fox Business US, CNBC Arabia, Ashark Business News, and she's joining Daily Star today for the first time. So, should we start, Ms. Aisha, with the broader question of the hour? What
Sure.
impact has there been from the closure of the Strait of Hormuz globally, and what are the immediate and future impacts you foresee in Bangladesh?
Ramisa, first, let me thank you for having me on the show. It's a pleasure to be on the Daily Star for the first time and to be talking about such an important topic today. Although it's not a very happy topic, but I think there are some silver linings to this, some things that we can learn. So let's get started. Now, you asked me about the closure of the Strait of Hormuz. Now, by now, I think everybody is aware that approximately 20% of global energy flows through the Strait of Hormuz because it's that little gap between, Iran and the UAE, and most of the Gulf countries are situated there. So most of the world's ships carrying energy passes through there. Now, 20% of the world's energy may not seem like a lot, but it actually puts a lot of pressure on prices, right? So since the beginning of the war, we've seen prices go up about $20 to $23. Again, in the larger scale of things, this doesn't seem like a lot, but in fact, even a $10 increase in prices can push up global inflation and slow down global growth. So that's not great for anyone, and it's particularly not great for a country like Bangladesh, because we are very, very much dependent on imports for energy, right? So about 70% of our imported energy comes from the Middle East. And this is normal because they are closest to us, right? And so that would be our most direct source of importing energy. And when I say energy, I mean all kinds of fuel. So it's not just the oil that you put in your car or the petrol that you put in your car. It's also LNG, which is liquefied natural gas. That's used for our electricity supply. And of course, we have, other fuel that goes into industrials, right? To run the industries. So that's also another, source. So obviously, with the Strait of Hormuz being closed, with prices going up, the biggest impact is obviously higher prices. However, at the moment, what's a little bit more scary is if nothing is coming out of the Strait of Hormuz, there's a likelihood that we might run out of the energy that we have in the country at the moment.
Right. So, can you expand a little more on LNG imports and the industrial power cuts and how that can have effect on day-to-day life for a country like Bangladesh?
Sure. So let's take a step back and see how much energy or LNG comes out of the Middle East. So the biggest LNG producer is obviously Qatar Energy. And Qatar Energy provides about 20% of global energy. Now, for us, we import almost all of the LNG from either Qatar or from Oman. Now, there's some good news here, of course. In the last 1 year, we have sanctioned a higher level of LNG to be imported. So once this LNG starts flowing through, we will have more supply for the future. Unfortunately, right now, the situation is that Qatar is closing down their LNG facility, or actually, they've closed down their LNG facility, which means there's no production. And restarting this production facility will take anywhere between 2 to 4 weeks, even if the war stops today.
Oh
Having
gosh.
said that, one good thing is they do have about 76 million barrels in storage. So that's a good thing and a bad thing. The good thing is they
Mm-hmm.
can ship this. It won't be easy, but they can ship this. And we've already heard about, about six, I want to say six ships coming through and will reach our Chittagong port in the next 1 to 2 weeks. So that should actually give us a really, really good buffer. For
Mm-hmm.
now, we have a buffer of about 30 days. So things are not as dire, but it's time to be cautious and it's time to really understand the risks, right? We may have to ration energy, we may have to ration electricity. What does that mean for people like you and me? It
Yeah.
means we may have to deal with more load shedding, right? So instead of maybe 1 hour going off, it might be two, it might be three, it might be even 4 or 5 in a day. So for people like you and me, we need to remember that we need to charge our phones ahead of time when there is electricity. We need to make sure that we have backups. If anyone's using backup generators, they should stock up on diesel, and so on and so forth. So just a few important steps to make our daily lives easier if the government has to do this. And most likely they'll have to do some of it. We're just hoping that it's not a lot.
Thank you so much for also adding that in as to what we can do. And as we talk about LNG, I wanted to also ask about the threat of oil running out and depleting energy stockpiles. And will that have a similar effect, or will that have more of an immediate effect on countries like Bangladesh?
So it depends on what kind of oil you're talking about again. So, for example, Bangladesh has 2 weeks of stockpile when it comes to diesel.
Mhm.
As I said, when it comes to LNG, it's a little bit longer, it's about a month. And for fuel oil, which goes into, for example, the industries, that's about, I want to say, 2.5 to 3 months almost, right? So that gives us a good buffer. But at the same time, we are coming up on a very critical period of planting. And so we do need irrigation for our agricultural produce.
Mhm.
For that, we need to make sure that there is sufficient energy that flows through to the farms so that this irrigation can be done. So there are various risks. Some are balanced, some are not very balanced. Diesel, for example, is not a very balanced risk. But I do understand that the government is doing everything they can to try and get some of those shipments through to Bangladesh.
So regarding shipment, what it will be the impact as we're seeing globally, and are there any alternative routes?
So this is a very interesting question. So shipment, let's put shipment into sea shipment and air shipment. Okay, so we have both. We have sea freight and air freight. Now, when it comes to sea freight, when the Strait of Hormuz is closed, there's obviously the other route, which is the Suez Canal and the Red Sea. So Saudi has a pipeline running through there. The other option is you have Oman, which is not, which is on the other side or closer to us side of Strait of Hormuz. And then you also have Fujairah, which may be able to release some tankers. Fujairah is a part of the UAE. So there are alternatives, yes. LNG, not so much, but for crude oil, there are alternatives. So that's a good thing. However, given the shortage, okay, these
Mm,
routes will now become very expensive. The Red Sea route was already threatened by, some terrorist activities. There has been issues over there for the last, I want to say, 2 years now almost,
mm,
and so that route is not operating at 100% capacity. So when it comes to the flow of oil, we still have options, but the options are limited. And because of the pressure now for all the countries to import from just one particular route, it becomes more challenging for a country like us. It's obviously a longer route also for us. So that's again another issue. A longer route means higher prices. Overall, shipping prices have gone up at least 4 to 5 times. That's a lot, because if you consider, freight prices about 100,000, now it's about 400,000. It's like that. Um, Another issue for us is sending cargo out, right? So
Mm,
the RMG sector. The RMG sector depends on exports almost exclusively. And most of our exports are going to Europe and they're going to the US. Um, the European route goes through the goes through the Red Sea and the Suez Canal, right? So it goes around Africa and then through the Red Sea. Now, what will happen is, if you're going to have to reroute this cargo, or if this route already becomes very heavily populated, our ships may not be able to get safe passage or early passage, which means that there will be delays in the supply chain. So maybe our garments manufacturers may not be able to meet their deadlines, and they may have to push back their deadlines. That's not a great thing. I mean, buyers will probably understand, but it puts the whole supply chain into a lot of pressure, right?
mm,
And then, of course, you have the hub, which is Dubai. So, Dubai Airport is a huge hub for air freight and air shipping transshipments. So,
mm,
much of the time, what happens is we send some goods which are time specific or time bound, we send them to Dubai by air. My understanding is there's about 1,200 tons of garments that are stranded in our airport, waiting to be flown out to Dubai and then flown out to various parts of the world from there. So,
mhm.
again, this puts pressure on deadlines, but it
Yeah.
also increases the cost for these manufacturers. Um, and this is not great for us, because garments manufacturing already has very thin margins, means they make very minimal profits. They do volume business, right? So extra cost will eat into their profits even more, may even push some of them into losses. So that's something, which is a difficult situation for them.
And so what other, and that's an impact that you see in the runway. What other impacts, such as fertilizers or other industries, do you see indirect impact in from this protracted war?
That's a great question. So, when we talk about oil and fuel, okay, so we're talking about oil that is used for fuel or for electricity directly, right? But oil also has, so petrochemicals also have a lot of other byproducts that are used. So, fertilizer, for example, is one of them, right? And I know that a huge amount of fertilizer for India comes from the Middle East, and so does Bangladesh. So it's going to be a difficult situation, because as the supply of fertilizer is reduced, prices start to go up. Now, if you're looking at planting season, so if you're planting now around March and April, we will see higher prices in fertilizer baked into the price of goods, right? So, for example, the rice prices that will come after the harvest, 6 to 8 months or 9 months later, that price will be higher. So the impact of these fertilizer prices may not be for you and me today. However, this will hit us in our food prices 6 to 9 months down the line. And these
Mhm,
prices could remain high for a certain period of time, like another 6 to 9 months. So we're talking about a total of 1.5 years of impact of higher prices because of this situation.
mhm,
And it's just not just fertilizer. So globally, 40% of the world's sulfur comes from the Middle East. Helium, which is another byproduct of petrochemicals and cannot be produced in the lab, cannot be produced synthetically. So it has to be It's something that is produced when oil is taken out of the ground. So
Mm,
chemicals like this are very, very important in the manufacturing of a whole host of things. So, for example, copper, and then semiconductors and electronics. So, what does that mean for you and me again? It
yeah.
means that the price of electronics will start to go up. So, it's not just one effect, it's not just food prices going up, but it's the prices of all kinds of goods going up across the world, because a lot of inputs that go into manufacturing comes from the petrochemical industry. Even,
Mm,
for example, garments. So polyester comes from petrochemicals. Dyes for our clothes comes from petrochemicals. So
mm,
we are, as as a not just as a country, but globally, we are heavily dependent on various kinds of petrochemical products. And this will have an effect not just today, but as I said, it will creep into prices over the course of 6 to 9 months. And
mm,
then following 6 to 9 months, we might continue to have higher prices. And
mm,
that's
yeah.
how do you prepare for something like that?
Right.
There's no preparation really. So we just have to save, and we just have to realize that what's coming up next will be a little bit of a difficult time with
Mm-hmm.
higher prices around the world. But just as we got through it in COVID, we will gradually get through this as well.
Thank you so much for that really important take on all the materials. And so I as we're talking about higher prices, I wanted to understand what you think about the strain on Bangladesh's recovering forex reserves.
This is also a very important topic to talk about, because right now our reserves have improved. Let's put it that way. That's a good thing.
Yeah.
But in order to further improve our reserves, obviously we need to bring in more dollars. Now there are two issues over here. So one is the price of everything going up, and particularly energy, which is priced in dollars. So if tomorrow you want to buy a barrel of oil, what do you pay in? You have to pay in dollars, right?
Mm,
At the moment, or prior to the war, our import bill for fuel and energy was about $4 billion. Now, with
mm,
every $10 increase, you multiply that, and you can see that our import bill, even after this war maybe dies down a little bit, starts to go up. So a sustained increase in the price of oil will be much worse, not just for the world, but also for Bangladesh, because,
mm,
again, it will put pressure on reserves. This is another reason in the last 6, 7 days, what we've seen is the US dollar index start to go up, because there is now a demand for dollars around the world, because more people realize that they have to pay higher prices for crude and for other you know commodities, and therefore more people are demanding the dollar. This is a very simple explanation of what's happening, but it's
mm,
also a very important explanation, and it goes back to your topic of reserves. Now
mm,
we need to keep those reserves going, so that we can pay for the energy, or the higher energy cost that may be coming down the line, or the higher commodity cost that may be coming down the line. Um, During this disruption, that will be harder to do, but obviously, once this passes, I'm sure the government will take steps to put pressure on increasing our foreign exchange reserves. And one way for that, obviously, is remittances.
right. So I wanted to, I was that, that's what I was going to come to is the Bangladesh's economy and the forex reserves are dependent on the remittance lifeline in the labor market. And we've already seen workers leave the UAE and Saudi Arabia recently. So will this war accelerate that trend, or how do you see it impacting remittances overall?
So, to a certain extent, yes, I think the war will accelerate that trend. Now, just to look at some of the numbers, we have about 4.5 million Bangladeshis employed across the GCC. And the GCC is the Gulf Cooperation countries. So that includes Saudi Arabia, Bahrain, Qatar, Oman, UAE, and Kuwait, right? And so across these countries, we work in various capacities. Most of the Bangladeshis work in the capacity of labor, right? So all this development and the fine buildings that you see in these countries, most of it have been built by our countrymen. And that's something to be proud of, honestly. But gradually we are, or at least from what I've seen in the last 20 years being in the Middle East, we have started to take on better and better positions. However, those positions stop at, let's say, a taxi driver level. They don't go beyond that. So, one of the things that we can and desperately should do is upskill our workers, right? It honestly pains me to see that some of the better jobs in the Middle East have been taken by people from India, from Nepal, and not saying that they don't deserve it, but we deserve it too, right? And why can't we get those jobs? One of the big reasons is the lack of the ability to speak in English, right? It's not that we are not good at what we do. Honestly, Bangladeshis have a very, very good reputation in the UAE. People love to employ Bangladeshi workers. But at the same time, our skill level at the massive scale is quite low.
Mm,
So in order to improve the ability to get remittances, not just in the UAE, but globally as well, we need to upskill our workers. We need to upskill the people who are going abroad to work. And when they start to work in higher and better positions, obviously they start to send back more solid levels of remittances to the country. And that's good for all of us.
mm, mm. So I mean, will up what but upscaling workers, that will also require more investment into the labor market internally. And so, with all this together and the devaluation that's happened, do you see the general regarding the general macroeconomic health of the nation? Are we looking at economic slowdown inevitably and stagflation, or what is your take on how on the long term impact of this?
So yes, to answer your question in short, but the first thing you said, I just want to go back to that a little bit about upskilling our workers. So one way that we could actually upskill the workers is to have an exchange program with some of these countries, right? So for example, the UAE, we can tell them that, hey, we will send you 20,000 workers, but they will be of, say, a skill level of 6 or 5 or 4, you know, and they can then in turn give us, the funds to sort of to upskill these workers so they can make some of the investment into the people that they will hire, if that makes sense. So I think that's one good way to go about it. But in general, when we're looking at the situation today,
Mm,
what you asked about the macroeconomic situation. So Bangladesh has been on a path of rebuilding, right? For the last almost 2 years now, 1.5 years. And the situation is still, I want to say, we're still growing, and the growth has slowed down already. So when we talk about stagflation, so let me just explain what stagflation means. It's some of these
right.
big words that we love to use,
Yeah.
but very simply put, stagflation means when a country's growth is slowing down, but prices are going up, right? So
Right.
it's stagnant economy and inflation at the same time. That's what we put together and we say stagflation. Um, Now, when we're talking about this stagflation, the slowdown in growth and higher prices, it's not just Bangladesh that will be affected. So the one good thing is we're not alone in this fight, right? Where the whole world is going to be affected. And that sort of puts a little bit or takes a little bit of the pressure off of us, because just like in COVID, the whole world was under distress. And yet again, now the whole world is under distress. So we're not the only ones, dealing with this situation. Now, having said that, that doesn't help people like us in Bangladesh or any of
Right.
us, right? So the reality is, the longer that this war continues, the more we're looking at a situation where the country's growth will slow down and inflation will, stay high. We did see some prices come down in the last 1.5 years, but I don't think that that situation can remain if this war continues. So we should all be hoping for a quick resolution to the war.
Right. And so, I mean, what are some precautionary measures that the government can take? First, I want to come to you addressed a little bit of this already. First, that the government can take in order to lessen this impact. And then I want to also come to the private sector industries that you've mentioned and addressed already.
Sure. So I think there are playbooks that other countries have done, and we can obviously learn from them. There's so let's take some of these step by step. So first is energy, right? As I just mentioned, we have a very short runway of energy right now. So it's only 2 weeks for diesel, 1 month for LNG. We're hoping more will come through. However, we don't have a big buffer, right? Most countries try to have a buffer of at least 2 to 3 months at a minimum, and a better buffer would be 6 to 9 months. Now, 6 to 9 months for a reserve, let's say like a strategic petroleum reserve, that will take time for us to build. We are a growing country, but at least the government can take steps to build a reserve of at least 2 to 3 months, so that any unfortunate events can be tackled.
Mhm.
Uh, the other thing is to diversify our energy sources. So we're already doing that. Yeah, we are doing renewable energy, but I think more of that needs to be pushed through. And particularly for countries like us who are so heavily dependent on, imported energy, we have to find ways of producing our own energy. That will solve a lot of the problems. Then we come to food supply. So, food supply is a tricky one. Again, that goes back, I think, to the energy situation. If we have buffers, if we can start to generate our own energy, that will gradually feed into the food supply and to other commodities and bring down prices over there as well. So one is linked to the other in many ways. There could be alternative sourcing as well. One thing that we do is, or one thing that this crisis has shown us, is that we're very heavily dependent on the Middle East for some very, very key things, right? Like
Mhm.
we have about over 70% of our, energy coming from the Middle East. That's a lot. So diversifying the sources as well could be a very important step, and that means importing from other countries other than the Middle East for, commodities like energy.
Okay.
Then we
And
talk. Sorry, go ahead.
no, no, no. Go ahead, please. Please go ahead.
So just, carrying on with where else we could have opportunities, we have an excellent port, right? So we can develop. So we've already started developing, but this port could be very strategic in terms of, helping to be not a huge hub, but at least like a semi hub, right? And so will our airport. So again, our, the country, we are very strategically located. We can use that to our advantage. And I hope the new government will look towards doing that as well.
Right. And what about, we've seen the stock market take a hit in the last couple of days. And so, what can Bangladesh's what about the FDI and the impact on attracting FDI in for Bangladesh's public markets?
So, in terms of the public markets, I think there's still some work to be done over there. I know that there have been new laws that have been circulated with respect to our stock exchange, but I think we still need to open up our stock exchange far more. Um, at the moment, it's still very much concentrated in the hands of a few, which is not a great thing. So, we need to have, when you talk about a public market, it has to be public. At the moment, it's not really public, right? So there's a lot of work to be done on the financial sector side, and I'm not saying that we can't get there. We can get there. We have very smart people in this country, and we know what needs to be done. We just need to do it. That's all. I think there is a lot of potential for foreign direct investment into a country like ours. And just as I said, it's not that we're just a one-way street. We don't expect that. We don't need to expect that people will just invest in our country and take a return. The return is much greater than just monetary return, right? So there's a lot of opportunities in this country that other countries can take advantage of. So we can very easily create a win-win situation. A lot of that work has started in the last 1.5 years, and we need to carry on that. We need to explore further opportunities, new opportunities. Now, one unfortunate thing, though, that I see from this war is that the foreign investment that we could have probably taken out from the Middle East
Right.
will be reduced.
Yes.
And that's not just for us, it's for everyone. So the UAE has been a big investor across various sectors across the world.
Mm.
But unfortunately, they're spending a lot of money now defending themselves in this war, right? And so, what does that mean for us? It means that they're going to be using whatever money they have to rebuild their own defenses, their own country, versus sending this money to other countries and investing in other countries. So, I'm not saying they won't do it. It it'll probably take longer than expected. So that's one downside to what's happening in the Middle East right now.
And so, on the, you know, talking about what more the government can also do, and I wanted to ask about incentive incentivization schemes uh, for, let's say, renewable energy producers. What sort of incentivization schemes from a financial perspective do you think should be deployed during this time?
That's a great question. So when it comes to renewable energy, I think, I mean, I want to say at least 10 years ago, I thought about writing a paper. I never wrote it. But the one thing that has always occurred to me is get the financing involved, right? So the moment you get banks involved, the moment you get, the financial sector involved into these strategic priorities, you will start to see things happening, right? The development sector and the financial sector oftentimes work very separately, and that's a little sad. There are a few big banks that I know are doing important work in the development sector, so the development of renewables and other strategic priorities. Standard Chartered is one of them. I know HSBC does some of that. But we need our banking sector as well to get more involved in these strategic priorities on the private side. So that's the private side incentive. And then the government can incentivize the banks to pump more money into these strategic priorities, to fund these strategic priorities. So it won't be a direct, hey, here's money, go ahead and build a renewable energy plant. No, so it will be a little bit more indirect, but there can be a very interesting and important incentivization scheme for banks, for the private sector, and for the public sector to get involved and work on these issues.
And since we have talked about RMG and we talk a lot about, diversification, so are there any incentivization schemes you foresee for which could accelerate or diversify away from having the impact that they've had that you talked about before?
So I think one thing everybody knows is that we're overly reliant on the RMG sector. Um, so much of our foreign currency, of this country's wealth, comes from the RMG sector, and that's not a bad thing. That's a good thing, but at the same time, we can diversify that, and by that I don't mean we need to shrink the RMG sector. The RMG sector can keep growing the way it's growing. But what we need to do is we need to grow other sectors instead, so that when we look at the pie, the RMG sector becomes a smaller proportion of that pie, right?
Mhm.
And we have so many great sectors. We're actually very good at manufacturing, not just garments, but plenty of things. There are so many things that we do well in this country. And we need to have that ambition to take that manufacturing to the next level, which means to start and exporting the goods that we make in this country to other countries. We need to learn to love our country and the products that are made here versus always wanting to have imported products. There are things that we won't be able to do just yet. I'm not saying that Bangladesh is going to go and build planes tomorrow, right? But we have an amazing leather sector, for example. But we don't see a lot of these being exported to other countries. I've been in the Middle East. I had been in the Middle East for almost, over 19 years. I never saw Bangladeshi leather products. Uh, but I did see Indian and Pakistani leather products. Um, ours, I want to say, is actually better. Our quality is superior. We do better work, but we don't see our goods in foreign countries. And I think there's a huge opportunity there for the government to help us a little bit, not just to attract other people to our country, but to push us to other countries as well.
Mhm. So, are there any countries that you think specifically for G2G supply deals where it should it to diversify away from Gulf dependency?
So the world is open to us, honestly. So we have a really, really strong market when it comes to garments. We have a strong market in Europe. We have a strong market, relatively strong market in the US. Um, but I think there's a lot of opportunity in Asia, for example, what we call the ASEAN countries. I know they make their own goods, but at the same time, there has to be something that we can export to them and reciprocate and import from them as well. So we have countries like Japan, we have countries like Russia, we have, Western Europe. So there's a lot of it. It's not just so, and in fact, I think we haven't even tapped the Gulf opportunity very well either. So when it comes to exporting our goods, right? So I think there's a lot that can be done. We are very talented. We're a very talented nation, honestly. We just have to put our talents to good use.
Yeah, that's your positive outlook as well is so balanced. So thank you for giving us this view. I just have one last question, which is, as you know, there's been a lot of talk and discussions on LDC graduation. So do you believe the economic impact of this conflict and this war provides justification for Bangladesh to deter the LDC graduation?
So it does. When it comes to the topic of LDC graduation, I'm a little torn personally because, on the one hand, I do want to see the country graduate out of that status, right? Because that kind of that's great for us. It's a commendable achievement. But on the other hand, I do understand the economic realities of graduating out of that status. Now, just for everybody who's listening and who's not an economist, LDC graduation means we're moving from being least developed country. So that's a good thing for us, right? So we're improving, we're developing as a country. But at the same time, as a least developed country, we used to get a lot of preference in terms of rates and tariffs. And if we move from here, if we grow, and graduate, we will not get that preference. So that puts a lot of pressure on our garment sector in particular. So I think when it comes to this topic, again, that's another reason why we need to diversify out of relying just on the garment sector. So there's a lot of opportunity that's out there. And one way to manage this LDC graduation situation is to diversify our economy away from relying on the garment sector. That should help us move to the next level with relatively less pain and more ease.
Thank you so much for that, for the answers and for your outlook. Are there any points that I didn't touch on that you think is important to address as we before we end?
So yes, I just want to say that this is a difficult situation. And yes, the longer this war carries on, we will feel the pressure as a country as well. However, there is a silver lining to this. The war will end. And in the meantime, we just have to, hold on and be practical about how we behave, right? So if the government is rationing fuel, if the government is asking you to take only 10 liters for your car in a day, try to stick to that, because we have each other and we can help each other by listening to the steps that the government is taking. They're doing it for us, they're doing it to help us. And we need to be more practical when it comes to this situation. Otherwise, we're only harming ourselves.
Thank you so much for the practical solutions, for also for giving hope and but practically. So thank you so much, Miss Aisha, for joining us today. I've learned a lot, and hopefully this gives all of us who's watching a bit more clarity on how our lives can be affected by what's happening. We will continue to follow your work and as things unfold, and we hope to have you here at the Daily Star again.
Thank you so much for having me.
Of course. Thank you, everyone, for joining the discussion during Ramadan. We're doing this series for you on this consequential war, so please do give us feedback. Meanwhile, the Geopolitical Insights page publishes articles daily, so you can read it on the website and in print every Sunday. We have an issue, so tomorrow morning, grab your copies. Thank you so much again. I'll see you in the next episode. Ramisa Rob, The Daily Star.